Good evening, everyone. Let's start today's session. Kushagra, you can start.
So is my screen visible?
Yeah, it's visible.
Okay. So hello everyone. My name is Kushagra Chaturvedi, and today I am going to present on stochastic oscillator. So before delving into the topic, let me first list out what are the contents of the presentation here. Uh, Firstly, I would define what is stochastic oscillator. Then we'll move out to what how the stochastic oscillator is calculated. Then we will look into the purpose for the stochastic oscillator. Then what are the parameters settings that are done for it, and how the stochastic oscillator is interpreted in it, and what is the difference between the percentage k and percentage g lines that are very important in the stochastic oscillators, and can this stochastic oscillator be used in isolation for making the trading decisions, and what is the bullish or what is the bearish divergence here in the stochastic oscillator. Then what are the limitations of the stochastic oscillator, and finally I will conclude the presentation. Okay. So now coming on to the first slide, what is the stochastic oscillator? So stochastic oscillator in a layman term is a momentum indicator in the technical analysis of financial market. So what is a momentum indicator? Momentum indicator basically means it indicates, it analyzes what is the strength and what are the, what is the strength of the price and what is the direction of the price in a particular financial market like stocks or commodities. So this is used to this stochastic oscillator is used to analyze the strength of the price and the direction of that particular asset, and that is why it's called you know a momentum indicator. It also helps in identifying the trend reversals and overbought and oversold conditions, which we'll look further into the slides. And what it does is it compares a security's closing price. Closing price is the price at which a particular stock or commodity ends in the market on a particular day. So it compares that closing price to a particular range of highest price that has been in a particular period and the lowest price that has been in a particular period. Using that comparison, we are able to make certain decisions regarding the momentum and the trend reversals and the overbought and oversold conditions. Okay, and it's widely used in various financial market as it's written. It includes stocks, commodities, currencies, and it provides valuable insight into the market dynamics. Now, coming on to the how the stochastic oscillators are calculated. So basically, the percentage k, that is the first most valuable part of stochastic oscillator. They are calculated using this formula. The percentage k is equal to current close minus lowest low divided by highest high minus lowest low. So it's just like how we do normalizations or standardizations in a particular statistical analysis. That's what we are doing. We are taking a particular time period, that is 14 days, that is generally taken. We can also vary this 14 days based on the price fluctuations or sensitivity for the stochastic oscillator. So let's take the general 14 days that we usually take. And during this 14 days, what we do, we find the highest price that a particular stock has taken and the lowest price that the particular stock has taken. And we use this the above formula for calculating the percentage K line. And then we calculate the percentage G line, that is, we use simple moving average. The simple moving average is, the sum of values over a particular time period divided by total number of points, and that time period is basically taken as the a 3 period simple moving average. So using that simple moving average, we calculate the percentage D line. And as you already know that the simple moving average has a smoothing effect in various statistical analysis, and that's why we are calculating this percentage D line. Now, what is the purpose of stochastic oscillator? So stochastic oscillators has three major purposes. First is, identifying the market momentum, as I have already mentioned. It serves the crucial purpose. The primary and crucial purpose of the stochastic oscillator, identifying the market momentum. The traders and market analysts can make not perfect, but a certain decisions regarding uh, the market entry, market trend, and what the direction of the price will be using this market momentum only. Then it also helps in identifying the trend reversal, potential reversal points in a particular trend. So using the reversal points in the trend of a market, we can make particular entry or exit into the market. And making an entry and exit is one of the most important part when we look in a financial market. So uh, like buying or selling a particular asset or stock can be quite crucial in a trader's life. And then it also helps in identifying the overbought and oversold condition. We usually use a threshold of 80 and 20. Above 80 it's overbought condition, and below 20 it's oversold condition. So we can make decisions regarding the overbought and oversold conditions using that percentage K and percentage D line. Then what are the parameters for stochastic oscillators? So there are three major parameters here, as already mentioned in the calculator. The time period is the specific amount of time using which during which we are calculating the highest stock price or the commodity price and the lowest commodity price. That is known as the time period for this, and typically it's set to 14 days or 14 periods. Then the percentage K line, the percentage K line represents the relative position of the current closing price to the highest high and the lowest low prices. Just as in a normalization or standardization, people compare the data to a particular lowest point and the highest point. Then there is percentage G line. The percentage G line is the smoothened, simple moving average of the percentage K line. And in it also we use a 3-period simple moving average. So this is another parameter here in calculating the stochastic oscillators. Then coming on to how the stochastic oscillators are interpreted. So as I've already mentioned, the overbought and oversold conditions are quite important here. And when the oscillator moves above the 80 mark, then it suggests that we are having an overbought condition, and we should have a potential. It signifies that it's a potential, selling signal. We might see a downward trend. So that's why. And then the oversold condition, when the indicator drops below the 20 mark, then it's called an oversold condition, and it's a signal to for a potential buy of that commodity or stock, so that we can uh, the market might be seeing a upward trend. So that's why we say that it's a potential buy signal. Then the momentum direction using the percentage K and percentage D lines, definitely we can look into the momentum directions. Upward movement suggests that we have a buying pressure. The people are buying more and more, and the downward momentum suggests that the selling pressure is increasing, meaning that people are selling more and more. Then there are signal crossovers also. The percentage D and percentage K line surely might have many crossovers, many intersections, and those intersections can be interpreted in two ways. Where a percentage K line crosses below the percentage D line, it suggests a potential downward movement price, and when the potential K line crosses above the potential D line, it indicates a potential upward price movement. So upward is related to the bullish and downward is related to the bearish movement. Now coming on to the difference between percentage K and percentage D line. Okay. As we have already seen that there are two major parameters here involved in stochastic oscillators, the percentage K and percentage D. So percentage K, as mentioned in the calculator, we have calculated using the current closing price and its variation over the highest high and the lowest low. Okay, and the percentage K line is quite sensitive to the short-term price fluctuation. Okay, now let's look into the percentage D line first. So percentage D line is calculated using a smoothing application of simple moving average, a 3-day simple moving average. So percentage G line is quite a smoothened version of percentage K line. So percentage G line is the result of reduction in noise and volatility of percentage K. Okay, so percentage G is a resultant stable signal of percentage K. All right. So this provides an insight like the percentage K contains the noise and the volatility function or the parameters here. So the percentage K line is quite sensitive here to the short-term price fluctuations, and we can look into this short-term price fluctuation using the percentage K line. Whereas percentage G line, since it's a smoothened version, we might not be able to see any short-term price fluctuation on the percentage G line. So it's a major difference here. And as in the third point I have already mentioned, the rapid movements can indicate that there is a short-term price change, whereas the percentage G line has a smoother trend and it indicates the broader direction, not the short-term direction. And also, since it's a smoothened version and a reliable version, traders often, basically see the percentage uh, D line as a backup for percentage K line. So that's why it's quite important here also. Now, can stochastic oscillators be used for in isolation for trading decisions? Now, stochastic oscillators are a valuable tool. That's correct, and they help in identifying various market trends, trend reversals, momentum, overbought and oversold conditions. But still, using it in isolation means I am just using stochastic oscillator to make my market decisions. Now, this is a wrong way to approach the stochastic oscillators. They may provide a comprehensive view of the market, and sure, there are various important factors that they calculate regarding the market, but still, we should incorporate additional tools that are available for us. Denying the additional technical analysis tools like moving averages or trend lines or volume indicators, they can only improve upon the stochastic oscillator that is present there and improve upon our decisions. And they cannot, downgrade our decisions or uh, downplay our decisions. Sure, the analysis part might become more complex, but still it's regarding the money and the finance, so we cannot take a risk. And also there are limitations to stochastic oscillators like external influences or uh, other market factors that it does not take into consideration in the line. So that's why when someone asks that should stochastic oscillator be used in isolation, then the answer is surely no. Now, coming on to the another important part of stochastic oscillator, like what is a bullish and bearish divergence in stochastic oscillator? Fine. So a bullish divergence occurs when the price of a asset or the stock here in the stochastic oscillator, it forms a lower low while the stochastic oscillator is forming the higher low. So as you can see in the graph, and what it indicates here is the important part here is that the momentum of the price is strengthening. Okay, the price this even if the movement of the price is downward, it indicates that the momentum is strengthening. So this implies that there might be a upward price movement. Okay, so the traders can make decision based on this implication or uh, the outcome. And then there is the bearish divergence. What bearish divergence is? It's quite opposite of bullish. And bearish divergence means that the price of an asset forms a higher high, while stochastic oscillator is a lower high. So this suggests that the momentum of the price is weakening. Even if the movement is upward, the momentum is weakening. This means that the trend that is there, it might occur a downward price movement in that trend. So the price movement in bullish tends to be upward, uh, even in the downward movement, because of this divergence that is occurring. And in case of bearish, the movement might change to downward, even because the momentum is weakening. Okay, despite the movement being upward, it might in future change to downward movement. So these are the implications or the results of the analysis here. Now, what are the limitations of the stochastic oscillator? Limitations, as I've already mentioned, why we should not use in isolation. So these are the limitations here. The stochastic oscillator may generate false signal. Now, this generation of false signals is due to the volatility and external influences. This is known as the whipsaw effect. Now, this limitation is quite important, like considering additional technical indicators of market conditions. Okay, there are many additional technical indicators also, and as I already mentioned, we should use them in conjunction with the stochastic oscillator. So that's why it's quite important to understand the limitations here. Then stochastic oscillator also has a lack of trend information. Sure, we can get the reversal points, potential reversal points, but the trend information is often overlooked here. We do not understand or implicate the trend data into our calculation. That's why the overall direction is often misinterpreted here. Then a stochastic oscillator is a lagging indicator. Sure, a stochastic oscillator may not provide real-time signals, as there are delayed responses to market changes here, and that's why again we might need additional indicators so that we can have a real-time analysis also. Now, stochastic oscillator's sensitivity to market conditions can vary. Now, it's quite sensitive to market conditions, also the period factor that we set a fortnight, 14 days. And that also is a factor, hyperparameter in case of sensitivity analysis there. So it might vary, and we might not be able to grasp a particular or a good hyperparameter there. So that's why stochastic oscillator, this sensitivity is again a limitation here. Now conclusion. So stochastic oscillator basically, it leads to effective market analysis. Show the stochastic oscillator serves as a valuable tool, and for assessing the momentum and the reversal point, and also the overbought and the oversold condition. So sure, it's a effective market analysis tool, and it also provides the supplementary analysis. Okay, the stochastic oscillator is powerful indicator, uh, but its effectiveness can be enhanced if we make use of supplementary tools, as I've already mentioned, using it in tandem with other market analysis tools. Then risk management, effective risk management is quite important in any financial market and its analysis, and that's why like setting the stop loss during the trading, or proper sizing techniques are quite important here. Then contextual application, understanding the specific characteristic here of the market and adjusting these stochastic oscillators parameters uh, accordingly are quite the key factor here in the contextual analysis, and that's why it's mentioned. And the continued learning, sure, continued learning and exploration of various tools, and a stochastic oscillator itself might be addition of another hyperparameter or another parameter, another variable can improve upon the condition. So that's where continued learning is quite important here, in case of stochastic oscillator or any other market analysis tool, and we might just uh, bump into a great tool. Okay, so now coming on to the next slide. Thank you. If you have any questions, you can.
Kushagra, you are done?
Yes.
Okay, you don't have any reference slide and a Q&A slide.
I mean, reference was only to only given for that blog, right? And for the Q&A, it was originally a video presentation, and it got scheduled here, so I forgot to add the Q&A slide here.
All right, no issues. Okay, try to have less data and more explanation in your presentation next time, okay?
Okay.
All right, you can stop sharing your screen. I will give you feedback on that. Chandana,
Yes, ma'am.
you can start.
Okay. Ma'am, am I visible?
Yeah, you are.
Good evening, ma'am. My name is PURAM CHANDANA from Python Developers Group, and my task name is Options Pricing Presentation. So what we are going to see today is what is options pricing and what are the different types of options, and a classification of the main components of options, and the factors that are influencing options pricing. So let's see what is options pricing. Options pricing is the process of determining the value of an options contract based on various factors such as underlying assets price, strike price, time to expiration, volatility, and interest rates. Means it is a process to determine the value of an option, and these are the factors that are taken into consideration while determining the value of an option. So that is stock price, strike price, time to expiration, volatility, and interest rates. And these are the two main components of options pricing. One is intrinsic value, and the second one is extrinsic value. So let's see what is intrinsic and extrinsic value. So it is the difference between the stock price and strike price on price of an option. Stock price means it is the current price, and strike price is the future price. So the difference between them is intrinsic value, and it represents the actual worth of an option. And extrinsic value is the difference between premium and intrinsic value. Premium means the market price of option. So the difference between them is extrinsic value, and it is also known as time value. And these are the factors that are influencing extrinsic value. One is time to expiration and implied volatility. And options are classified into two types. One is call option, and second one is put option. So a call option. So let's call option versus put option. So a call option gives the holder the right to buy the underlying asset at a specified price. So it gives the right to buy, and put option is a right to sell. And the value of a call option increases when the underlying asset price rises. So when a stock price rises, then the value of a call option rises. When the stock price falls, then the put option value increases. So it is used to speculate on rising prices, and options are used to speculate on falling prices. These are the factors that are influencing options pricing. One is underlying asset price, or we can say it is stock price, strike price, time to expiration, volatility, interest rates, dividends. So the difference between them is intrinsic value. So intrinsic value also affecting the options pricing. So let's see what is Bloch-Scholes model. So we use this model widely in calculating theoretical price of European style options. And these are the factors were taken into consideration while calculating this model. That is stock price, strike price, time to expiration, interest rates, and all. And the actual market price and the market price may deviate from this model also due to various factors. Implied volatility. So it measures the expectations of a market regarding future price investments, like how the future price is fluctuating. So it will measure its value. Time decay. As I said before, when the option approaches to its expert, and as I said before, an intrinsic value, an option value is affecting due to various factors. So expiration date is also one of them. So when an option value approaches to its expiration date, its value reduced. So the reduction in the value of an option is it approaches to expiration date, assuming all the factors remains constant. We call it as time decay. So delta. So delta means for every $1 change in the stock price, there is a change in the options price. For example, if a delta is 0.5, then it indicates that for $1 change in the stock price, then there is a $0.5 change in the options price. So it determines that. And this is risk-free interest rate. So it represents the cost of return on a risk-free investment. So when in an investment, we will get the rate of return with no risk of default. And we are using this model. We are using this in options pricing model to account for the time value of money. And the conclusion. Actually, options pricing, it is a quite complex concept, but it is essential in financial market. And when we are making trading decisions, so it is very important to know about options pricing and what are the factors that are influencing options pricing. And these can be used in various strategies and income generation and speculation hedging and all. So, question and answers. Thank you. Ma'am?
Yes, Chandana, you're done?
Yes, ma'am.
But you don't have a reference slide.
Ma'am, I forget to add it, ma'am.
Okay, no problem. Try to add in your next presentation. And when you're presenting, make your presentations on full screen.
Okay, ma'am.
Okay, and keep the data up to the point only. Make them into points format instead of a paragraph form. Okay.
Okay.
All right, I will give you feedback on your mail. You can stop sharing.
Okay, ma'am. Thank you, ma'am.
Okay. Muskan, you can start.
Ma'am, am I visible?
Yeah, you are.
So, ma'am, good evening. My name is Muskan from Web Development Domain, and my task was to present overview of project synopsis. First of all, these are the contents which we are going to discuss today. First of all, construction parts, then goals, features, technologies, and the working of application and challenges and conclusions, and then references. Now, first of all, introduction. The real-time stock market data web application is full stack web application, which is good for especially for the beginners, those who are new to the stock market, those who are they don't know about the stock market, how they can start trading. So they can use this web application. This is very easy to understand format. They can use as their if they are starting a career, and after and this empowers decision making. Users can make their decisions very well using this web application. This gives the idea of profit and loss, the status of their stock, so they can make their decision very well. Then financial environment. This gives all kinds of news regarding to stock market and their stock, their investment. So this provides them a very good financial environment where they can invest. Then features. Features of this application is, first of all, this provides real-time stock market data. Users can see profit and loss in real time. Second thing, user authentication and security. This provides the secure. Especially beginners are really worried about the security of their data, their money, uh, their confidential details. So this provides fully security and authenticate the user. Third, easy to understand format. This web application is built in very easy form. User can understand the data, the charts, and the graphs in very easy form. Then responsive design. This application is responsive to the user. They can track the activities there. Then now these are the technologies I have used. For front end, I have used HTML, CSS, JavaScript. For backend, I have used MongoDB, Node.js, Express, JS for manage the data structures, and server-side development, server-side logic, respectively. Then for APIs, I have used Alpha Ventus APIs and Muse APIs. Then working. First of all, if I am new to the application, firstly I have to sign it, then I have to log in. If I have already signed up, then I have to log in into my account, and then I have to select the stock in which market I have to invest. If I want to track the activity of a particular market, then I can search the market, and then I can select my stock. Then I can see the candle chart, the profit and loss in real time. Uh, then there are some challenges. First of all, real-time stock market data. This ensures this application we promises to make the real-time uh, stock market data, but this is a challenge for us to make it real time, to show only the valuable content there. We have to be very careful about the data passing. And then another challenge is user authentication. User authentication is also very important because users are worried about their data. So you authenticating the user is also a major task for us. It can be it can be defined as a challenge for us to make authenticate the user. Then another challenge is user interface. We have to make this web application very responsive, very easy to for everyone, for advanced user, for an intermediate, for a beginner also. So this is also a challenge for us to make this web application for user friendly. Then another now next slide, my conclusion. Conclusion, I can say this is a essential tool for investor. If anyone want to invest, they can use this application, whether they are beginner, intermediate, or advanced level beginners. They application is very easy to understand. User can understand, investor can understand the stock market data very easy. And third thing, this is user friendly. This provides real time data. So now these are my references. To understand the stock market, I have used these two websites, Money Control and TradingView. There are several websites are there like Zerodha and all, but I have used these two. Then, ma'am, if you have any questions, you can ask. Thank you.
Muskan, you're done.
Yes, ma'am.
Okay, next time make your presentation on full screen while you're explaining. Okay?
Okay, ma'am.
And good presentation. You can improve from this as well. All right.
Thank you, ma'am.
Okay, I will give you feedback on your mail. You can stop sharing. Muskan, please stop sharing your screen. Yeah. Noor? Noor, you can start.
Yes, ma'am.
Please start your presentation.
Share screen research lab. Ma'am, screen is visible
Yeah, it's visible.
and my audio is clear.
Yeah, it is.
Okay. So my name is Ahamed Mondal. I am electronics engineering professional intern at Hackveda. I got tasks on researching air quality monitors. So before diving into the project PPT presentation, I will discuss the key contents of the PPT presentation. So PPT are contents, introduction, types of air quality monitors, components in air quality monitors, functionalities of air quality monitors components and their function and summary and references. So let's introduction. Begin with so introduction. Air quality is a critical aspect of our daily lives as the air we breathe directly impacts our health and well-being. In this presentation, I will delve into the significance of air quality monitoring, the technology behind air quality monitors, their applications, and the importance of ongoing research in this field. Pollution is a global issue that affects not only our environment but also our personal health. As such, understanding and monitoring air quality has become an essential task for governments, organizations, and individuals alike. And the primary tool for this endeavor is the air quality monitor, which is the focuses of our discussion today. Let's going to the next slide. Types of air quality monitors: real-time monitors, integrated monitors, smart air quality monitors. So real-time monitor provides instant measurement and can be portable or stationary. So real-time monitors we can use our homes and outside our homes or anywhere we want to monitor the air quality. And integrated monitors combine multiple sensors for comprehensive monitors. Like integrated monitors are we want to measure air quality. Suppose we want to measure the how much PM2 is content and how much PM10 is content. So we can measure it in a single air quality monitors. Smart air quality monitors. So connect to the internet for remote tracking and data visualization. We can also monitor the air quality remotely. Examples are like satellite. So which we can monitor the air quality remotely. Going to the next slide. Okay. Components in air quality monitors. So components are including sensors, microprocessors, and display. Sensors like carbon monoxide sensors, nitrogen dioxide sensors, volatile organic sensors, and compounds sensors and particulate matter sensor (PM). And the microprocessor for used to process data from the sensor, send the data to the display and process it. After process it analyze the data for trends and connected to the Wi-Fi or cellular networks. where the microprocessor basically sends the data from the sensor and process it and send it to the display or cloud after processing it. So display unit is show the real time measurement of the air quality, and display trends alerts, provides the battery life and connection status, also the sensors and air quality monitors, enables user setting and calibration. Going to the next slide. Functionalities of air quality monitor components, sensors, including sensors, microprocessor, and display. Measure a specific pollutant in the air and convert them into the electrical signal. So sensors are used to measure the pollutants, and it convert to the according to the electrical signal, which is after processed by the microprocessor, and it is microprocessor, and it is transmitted to over the Wi-Fi networks. After that it displays shows. So if we observe we use the remote air quality monitor sensor, we can send up data through the Wi-Fi, or if we using the air quality monitor that is remotely available, so we can instantly see the results. Going to the next slide. So list of components and their functionalities. Carbon monoxide sensors. Carbon monoxide sensors measures the level of carbon monoxide in the air and alerts users of dangerous levels. Microprocessors processes data from the sensors and sends it to the display for user viewing and data analysis. LED display. LED display is shows real-time air quality measurement and color-coded alerts for different pollutant levels. Particulate matter PM sensors. PM sensors measures the level of PM in the air and alert users of the potential health risk associated with high PM levels. Going to the next slide. So in the summary, air quality monitors come in various types, each with different functionalities and monitoring capabilities. These monitors typically contain common components such as sensors, microprocessor, and display. Each component has a different functionality and helps create a comprehensive and accurate monitoring system. So next, going to the next slide. References. So I use references. WHO guidelines on indoor air quality provides a comprehensive guide on how to monitor air quality in indoor settings, and focusing on the health risk and measuring different pollutants. An EPAR sensor guidebook offers a guide how to choose, use, and maintain air quality sensors for personal use and environmental monitoring. Next, going to the next slide. So, any questions, ma'am?
No, you are done.
Yes, ma'am. And then last is thank you.
All right. Next time when you are presenting, don't just read the lines. Try to explain in your own words. Okay.
Okay, ma'am.
All right. I will give your feedback on your mail. You can stop sharing now.